All right, everybody. Good afternoon. Meredith Nagel here. I have been gone for a while and I've been missing you guys. So we are back in the saddle again with our Zoom Lunch and Learns. One of the most fun things that I get to do. I don't know how fun it is to watch, but it's fun to do because I love you guys knowing things. That's really one of the main reasons why I wanted to become a lawyer is because I wanted to know things and wanted to be able to help people learn. So today I have Gary Kane. Gary, can you say a hello to everybody, please? Give a
Wait, are these all people your friends?
no, no, they're not my friends. They're friendly. A couple of them might be a friend of me.
Well, I don't know how anybody, everybody should be a friend to you. You're the
Oh, you're
best.
so sweet.
That's
So,
okay.
everybody, here's what we're going to talk about today. And I'm going to shut my mouth and let Gary talk, not just listen to me run my mouth. But I got to tell you, there's something that I really think that the state of Florida does a disservice to consumers. And that is your ability to go onto SunBiz and do what you think is establishing the LLC or other business entity that you need. And the reason it's a disservice is because they let you go on there and do things. You know, you can put your credit card number in, you can click here, click that, enter here, enter there, but they don't give you much instruction as to what you're doing or what the impact is of what you're doing. So we have in the state a lot of people who have gotten the message that they need to have a limited liability company, LLC, to operate their business. And they've heard about it because their aunt told them, or they saw something about it from a lawyer on TikTok or some other thing, and they thought, wait, that's a great idea. Rather than just run my business as a sole proprietorship, I will set up an LLC. It'll help me with taxes and it'll help me with this thing that I've heard about called asset protection. So, in a nutshell, a sole proprietorship is when you set up a company and you just do your work. And Gary can give us a little more details, but most CPAs say that once you're going to net about $40,000 or more from an accounting perspective, it makes some sense to have operate in a business entity, whether an LLC or an Inc. or PA or partnership, one of those that it's helpful to do that because you get some tax breaks. So we're not really going to talk about that so much today. We're going to focus on the reason I think a lot of people choose the limited liability company as their vehicle of choice. And that's what we call them, how you run your company, what vehicle you have. Is it a corporate vehicle? Is it an LLC vehicle? Is it a partnership? Or is it a combination? And Gary will talk about that a little bit in a minute. But a lot of people have heard that having a limited liability company, an LLC, can do something like protect your assets. And they hear that and they don't know exactly what that means, but it sounds good to them. Plus, their neighbor's doing it, or their aunt, or they saw somebody on TikTok. So they go on the sunbiz.org, they enter the information, pay their credit card, and that's all they do. And unfortunately, in many ways, they have not accomplished what they thought they were going to accomplish. The most important thing we're going to talk about today is those of you that have gone on to Sunbiz and you have set your LLC up. Maybe it's Homevine Realty, maybe it's Nogler Enterprises, whatever it might be, and you are the only member or owner of that LLC. And Gary is going to talk about what that means for you. Now, Gary is a CPA that's been doing this. I've been a lawyer for 28 years. How long have you been a CPA, Gary?
Do I have to tell you?
You have to.
Okay, 52 years.
52 years.
Yeah, sad. I
That's
could have gotten a real job.
Gary has made a fabulous career of helping a small business, a medium-sized business, and large business, but I think he's got a real heart for the entrepreneur, and he's helped a lot of people build some really great businesses, and I mean some really big ones and some really small ones, like mine. But he's helped a lot of us navigate the Internal Revenue Code in a way that is beneficial to us and keeps us out of trouble. And he's the best of the best of the best. If you can get him, if you can talk him into working for you, you need to do that. I don't know how many new clients he's taking, but he is still sharing his wisdom. And today he's going to talk about what it looks like when you have a single member LLC and what the dangers are there for you. And while he's talking, if people want to throw some questions up in the chat, I will be monitoring that and can break in. So without further ado, take it away, Mr. Kane.
Well, I first of all, let me just tell you, I'm not a lawyer. So I find these things out because unfortunately, I get emails and I read things, and I discovered that what I thought was in an, an unbreakable wall between the single member LLC owner, the member in that LLC, and liabilities, that was
Mind if I
not
come over
quite
here and
true.
be on
Uh,
this? Yeah.
Hold on a
uh,
second. Mark, can you turn your audio off for me, please, buddy? Okay, go ahead. I'm sorry, Gary.
Okay. So that's not quite true that there is they had under Florida statutes, there's the ability to pierce the corporate, in essence, corporate veil of that LLC and get through the LLC and get through that little wall that you thought you built up and grab your assets. Well, you know, the reason I tell people to become an LLC, mainly is for liability protection, but also if you're operating as a sole proprietorship, a single member LLC operating as a sole proprietorship, you can operate as a sole proprietorship without the benefit of the LLC. So the only real reason to slide this protection over your company is to protect you from liability. Everything else, if you're an LLC operating as a sole proprietor, is the same. Um, I Now I understand that this is issues out there, and I'm looking for things that you can do to make that your LLC, you know, impervious to attack by your creditors, and you know, to go forward. I do want to tell you one thing, though. I there is people are always concerned if you don't pay your withholding taxes over, if you got a business and you're not paying your withholding taxes, can the IRS come and grab your assets because of that? But they can go to your personal assets for the amount that you withheld from your employees. It's called the trust fund portion. The amount that's that for FICA and FICA and Medicare that you pay on behalf of the employees, the IRS can't go after you because of the LLC. So at least that's a minor protection. That's federal law. That ain't Florida law. So
So real quickly, guys, I want to remind you that the LLC, we keep saying LLC, that stands for Limited Liability Company. That is a creature of statute. That is our written laws. Every state that I know has one. Florida has one, and we've had one since the 80s, although it didn't come into good use until late in the 90s. And the general idea is if I operate Keith Packey Realty as an LLC and I go out there and I commit some tortious act or I do something that could get my business in trouble, the theory, if it's set up correctly, is that if Keith has done something wrong in his LLC, that rather than getting at Keith's personal assets, the things that he owns, like his great condo at the beach, if you happen to have one of those, but you know what I mean, for his business misdoings, right? So we want that protection. We want to protect our personal assets. So we think, okay, LLC. And if the LLC is operated correctly, it does work. What essentially happens if Dan Newland comes chasing you because you've been in a car accident, and it would be something that would be protected under your LLC, then the most they could ever get would be a order that if you pay yourself from your LLC, that you have to pay your creditor. Well, you can imagine that's not very valuable because if I'm in charge of the LLC, I decide I'm not paying myself, and then I can go tell Dan Newland to pound sand. So that's what we've generally, that's a 50,000 foot view of what we've generally liked about the LLC. It provides that asset protection. But what Gary's going to talk about is what happens when you are the only member of the LLC. So talk about that, Gary.
all right, if you're the only member, then if someone sues you, like say someone goes out and hires Dan Newland because you were in a car accident, they can sue you And then if they get a judgment against you, they can go after your personal assets, your car, if you got other investments. And they can also now, under Florida statutes, go through you to your LLC and grab any assets. So if you got an LLC with, you know, typical, somebody forms an LLC for their rental property. They got a piece of rental property that's worth $1 million and they don't owe anything on it. Well, Dan finds out about that. He's Johnny on the spot and he goes right through you to the LLC and know, he can get a lien against it. He can, force the sale of it. So, I mean, but that's not the only thing. I mean, if you've got a business, they can go and take assets out of your business. So, the protection from for a single member LLC is kind of iffy. I mean, there are ways around it, but it's still iffy. So you
Yeah,
need
and
to
I will see, I will tell you, Gary, I see a substantial amount of people that the only owner of their LLC is themselves. Um,
correct.
right. And they think they've done something because they don't know any better. They heard about it. They went on Sunbiz, they set it up, but they've only selected themselves. And so now they are a single member LLC. So legally, basically what you guys have done to yourself is when you've done that, what you've accomplished is you've paid Sunbiz some money, you pay the Department of State money. You're going to pay your CPA to file a separate tax return. Most people report it under separate tax return. And you're going to pay an annual fee. And that's all you've really accomplished because you haven't given yourself any asset protection if it's just you. Let's get this straight again. This is, I just wish more people, I wish I could wear like a sandwich board. Remember those old things that people used to walk around, the end is near? I would say your single member LLC is not protecting you at all. It's doing nothing. Remember when we talk about liability protection for the LLC, I'm so glad that Gary brought up the rental house because I see that a lot. And I know that many of the realtors on this call see that. You buy a home, you're going to rent it out, you put it in an LLC, and you're looking for protections two ways. You're looking for protections in the first scenario we talked about. I get in a car accident and Dan Newland's trying to come after my assets and he wants my LLC property, right? If it's in a sole, if you're just by yourself, he's going to get it. If you've got another member, he won't, right? So you have that level of protection. Then you also have the level of protection that if someone is on your property and they're injured, on the LLC property, you want to limit that to just the LLC assets. But again, if it's a sole member LLC, then they can go and get your individual assets for things that happen on the LLC property as well. So, Gary, can you talk about something that I sometimes suggest, which is maybe adding on some minority members that don't have any rights to distribution? And what does that look like? And what do we need to be worried about for those of us who are now panicking, realizing we have a single member LLC, so we don't have what we thought we had. And now we're trying to cast about and figure out who do we add? What do we do now?
Well, so here's the thing. If you have a multi-member LLC,
Which
then
is
that one
anything more than one. Let's be clear. There's no
that
magic number more than one. Anything more than one is multi. Go ahead.
multi-member, now, you can't take your dog and make your dog a member. It's got to be another person or
Okay.
it could be a corporation.
Yeah.
But once you make it a multi-member LLC, you have an option. You can operate it as a partnership and file a partnership income tax return and distribute the income that way. You can file it as an S corporation or a C corporation and treat it under the corporation rules. S corporation pass through the income passes through. C corporation pays tax on its own stuff. Um, if you add this other member in a S corporation, let's say you have you want to bring you know, your
Now I'm
son
going to
in.
stop you right there because I see confusion on faces. They're confused about why we're all of a sudden talking about an S corporation when we were talking about an
An
LLC. Can you
LLC.
explain
Well,
that?
let me back up one step. An LLC is very flexible under the law. It can be under the tax law. An LLC under Florida law is an LLC, but under tax law, you have options. You have an option treating it as a multi-member LLC, treating it as a partnership or as a corporation. So those are two options, but they can be treated very differently under the tax law. Under the tax law, if you decide to treat your single member your multi-member LLC as a corporation and make it an S corporation, then you have to distribute your income in accordance with the ownership percentage. If you treat it as a partnership, which, again, under the partnership rules, you can allocate the income based on some reasonable reasonable formula. The the rule is it has to have substantial economic effect. So if you do it, if it looks like a duck and quacks like a duck, it's a duck. So if you do that, you can, for example, take one of your kids, you can take your spouse, you can take, your accountant. I always like taking your accountant. Make your accountant a member in your LLC and just allocate either a very tiny percentage or nothing to them, and you still pay tax on all the income, um, and and proceed on down the road. What you've done by taking this person in, as long as it's not fraud. I mean, if you, for example, again, I'm not a lawyer, but I think if someone is preparing to sue you and you know about it, and you take this person in, that could be considered a fraudulent move. But if you do this, you know, non-contemporaneous with a lawsuit or a threatened lawsuit, you should be okay. And then that person would be allocated under the partnership rules, would be allocated a portion of the income based on whatever formula you establish, and you're basically lifted you basically put yourself in a better position because you're not going to be subject to personal liability anymore.
What about if you want to add your children? I know that, my clients run the spectrum, probably same with people that are listening. Some of my clients, they don't mind risk. So they just are like, yeah, throw Johnny on there, give Johnny 5%, and Johnny's not going to do anything. He's going to continue to go to college. And now I'm going to pay part of Johnny's expenses out of my business as part of his distribution rather than just pay him out of my checking account, right? Sometimes clients will do something like that. Sometimes clients want to be a little more careful. And I do recommend almost all of us have kids or grandkids a lot better at social media than we are. And that's something that you could easily give your kid a very small task that you could legitimately say they are performing, like reviewing your social media in comparison to your competitors or something like that. I mean, if there are things that you can legitimately add on for your kids and your spouse to do that will pass any kind of test. But Gary's right. If you are within 3 years of being sued, if you're currently being sued, if there's a judgment against you, or you have reason to know that you're going to be sued, and you try to do these things now, I mean, better late than never, but they're likely to be set aside. Gary, if I were to add, let's say, Jay, and give him some interest in one of my LLCs, what is the tax implication going to be for that, for Jay or for me, for making that gift of a value, portion of a value of my company? I know a lot of people have that question.
Well, if you give somebody a portion of the value of your business, you've given them an asset. So it can be either a gift, which would be subject to the gift tax rules, or it could be compensation if they were an employee. So, I mean, that's the simple answer. Um, in any instance, the value of that gift or the value of that salary or that compensation is determined under the gift tax rules. So what that means is that you have to look at the value. So let's say you have a business and the business is worth, I'll make up a number, $100,000. So in theory, if you gave him a 2% gift, a 2% interest, it would be worth $2,000. Um, since I do business valuations, I'll keep this a little short. After a business appraiser gets involved with this, the $2,000 will be something closer to maybe $700 or $800. So we can whittle it down. So if it's going to be compensation and you tell your employee, I'm going to give you, 2% or 5% or whatever of my business, then we can make that number small enough where even though they have to pay tax on it, it can be basically be finessed. So it's not that big of a deal.
And if it's a family-owned LLC, they can give, each parent can give what, $19,000 worth of business interest a year to their kids, right? So
Right,
that's $38,000. I'm so bad at
right,
math.
right. And if you're, yeah, right. And so you can give, there's, when I say it's subject to gift tax, there's the annual exclusion, which will get most people, can be enough for most people. Then your lifetime exclusion, I think, is somewhere in the neighborhood of $14 million
Yeah,
now.
it's almost 14 million this year. So as I, correct me if I'm wrong, Gary, but if they're giving away less than the gift tax maximum. So for 2025, if they're giving away less than $19,000 per person of interest to their kid, so $38,000 for a couple, there's no reporting at all. If it's
That's right.
more than the 38,000, it is reported, but then it goes against your lifetime 14 million, almost $14 million exclusion. Did I explain that correctly, Gary?
Yeah, that's exactly right. And,
There's no money that's ever owed to the IRS. You don't ever pay them anything because unless you give away more than $14 million, in which event you need to call me because I need you for a client. But for most people, even when you make the report, it's not that you have to pay anything. They just
right,
theoretically keep track of all of your gifts above the minimum so that once you reach $14 million that you've given away next year, from then on, they'll start charging you a tax. Is that right? Did
right.
I explain it the
That,
right way?
yeah, that's correct. And, so very few people, unless you've got some sort of gift tax planning that you're doing, so you're giving away on an annual basis. Most people don't file gift tax returns. And there's so many exclusions. So if you give to your spouse, that's not considered a gift, and not a taxable gift. If you pay your kids tuition, that's not considered a taxable gift. So it just never happens.
Yeah.
Um, I mean, I file very few gift tax returns.
Unless
I
for
mean, it could be I have
some
stingy
rich
clients.
people, right? Some rich people do have it, like as you said, they have it as a strategy, and so they do need to keep track of every nickel. So let me ask you this, and this is an open question, and I hear lawyers and CPAs talking, having different opinions, and so I'm just asking you cold what your opinion is. There's some chatter that perhaps in the future, adding your spouse might not be enough because of this tenants by the entireties fiction we have in Florida. That is, you and your spouse own an undivided 100% interest of everything. And so there's been some discussion that if you add your spouse as the additional person, you might be running a risk. Have you ever thought about that or have any opinion about that, whether the spouse in Florida would be considered enough of a different person?
I've heard that too, and I've heard that there's some, there have been court cases. I don't know this for a fact, but I've heard there have been court cases where that's happened and they have been able to pierce the veil. But, you know, I would say that, you know, for in the abundance of caution, I would do you know, the most protective thing you can do in that, pick a person other than your spouse,
Right.
or, you know, or the other alternative, quite frankly, is you can, and this is, may a way around it, form a corporation and make the corporation the partner,
Yeah,
or
so
excuse me, the
if we
member.
really want to blow people's minds, and maybe we don't, because this blows my mind. What about this idea of a limited liability partnership where the LLC owns a portion and the partnership owns a portion? Is that a way that you can have one person own everything?
I, I think so. I would think that's the case. Uh,
And
uh,
that would look like the LLC would be the general partner, but they don't actually make any distributions, right? All the distributions go to the limited partner, which is the person.
right.
Yeah. So if somebody want, I guess my point of all that is some of you you want to throw up in your mouth just listening to all these acronyms. I think the only point I want to make here is that if you are stuck dead set on wanting to be your only member, go talk to Gary or another experienced CPA, which is not the same as an enrolled IRS agent, not the same as a bookkeeper. Those folks are great, but it's not the same. This is something you want to talk to a CPA about. But there are other options if you want to get a little bit more complicated. The main thing I want you guys, and go talk to him about that. If you really do want to stay stuck, just you. But assuming that that's not a priority, I think the main thing that we're really trying to get you guys to understand is that you must. If all you can do is add your spouse, that's better than nothing because we don't have a official court case that would dictate a response. We just have little low trial court cases that don't really matter a lot. So that's better than nothing. Of course, I like the idea of adding your kids because it's a way you can do some estate planning, especially over time, as you want to maybe give the kids more if there's a reason to do this, to do that. I would like to see if anybody has any questions because Gary and I could just sit and talk about this stuff all day. It's interesting to us, makes sense to us. The question is going to be, have we, okay, what would be best practices for LLCs when it comes to payroll and secondarily for business to business or business to something contracts? What is B2C? Business to consumer contracts. Okay, so if you want to get fancy, Mark, something like what yours, the business to business or business to consumer contracts, that's usually a service performed through a corporation that rents space from an LLC. So it can get complicated. So call me, Mark. I think, most of what you do should probably be done through a PA, but that's something I can talk to you about and talk to you can talk to your professional advisor about. I'm getting ready to start an LLC with an S corp. I should be protected enough if I'm the only person on it. No. Okay. So no, Jamie, Jerry, I've done a horrible job. To the contrary, you have no protection if you're just sitting out there with a single member LLC. You have no liability protection whatsoever. You have good reasons maybe that you want to do that from a accounting perspective or monies you're trying to save on your tax returns. I have a PA. Do I need to worry about any of this? Okay, yay. So a PA, I love this. I'm a PA. A lot of doctors and lawyers are PAs. Honest, you guys, it's just a professional moniker for ink. I guess lawyers and doctors. I don't know. I wonder, Gary, did we have a lobby and we just decided that we were too fancy to be called ink, and so we needed a PA as an option? Anybody can anybody can do a PA as generally the rule is that it's a professional association, meaning what you're doing, the people that you're doing it with are supposed to do the same thing as you do. We see a lot of real estate PAs, law PAs, medical PAs. So Jerry, back to your question. Yes, you need to get another member. Did you want to add anything about that, Gary?
Uh, no, I think you do need another member. There was some talk about, well, you can make it an S corporation, excuse me, under the Internal Revenue Code, but you're still a single member LLC.
Right.
That doesn't change the Florida statutes.
Yeah, I think the thing to understand is the IRS, I hate the IRS. I'm on record saying that. I hope I'm being recorded in it. I hope it, I don't know. I hate the IRS. I
I
think
never knew that.
I had this idea, Gary, that they said, listen, we're not running around trying to learn the rules of Georgia and Florida and Wyoming and Nevada. Y'all states, you do what you want to do, but when it comes to us, you're either a partnership or a corporation. And if you're a corporation, you're either C or S. Did I oversimplify that, Gary?
No, it's close enough. I mean, it's pretty simple.
And most of you guys are going to want to choose the S election. Remember, the C election causes income tax at the corporate level, at the company level. The S election passes everything down and you pay taxes through your 1040. Now, there are people in unique circumstances that choose the C. And here's where you should be scared. And Gary, correct me if I'm wrong here. If you file and you set up your LLC and you don't choose which corporation you're going to use, they're going to default you to a C. Is that right, Gary?
That's right. You have to file a specific election to be an S corporation.
You're going to be treated like a C unless you tell them you want an S. And you don't want to be a C unless somebody like Gary tells you so, because C means you pay more tax. Is that a fair way to explain it, Gary?
Well, but the worst part of it is, I mean, as you go along through life and you're operating your S corp, I mean your C corporation, everything is okay. But let's say one day you said, I'm tired of all this. I want to sell my business. I want to quit. And if you're a C corporation, brother, you're in trouble because you have to pay tax on the sale of that business. And then when the money comes out of the corporation, you got to pay tax on the money that comes out. So you got a double tax and it's not pretty. So, I mean, I had somebody been operating as a C corporation. I said, you got to be an S corporation because they're getting old. They're not going to work forever. And I mean, the husband said, "Okay, let's do it." The wife got mad at me, and you know, can't win it. You know, I was giving
It,
good advice.
yeah, it's very frustrating when clients won't take our very good advice, isn't it?
Yeah. Well,
They ask you what you think and then they completely disregard it, kind of like what they do to their realtors and their lenders. Um,
uh,
so I don't want to lose the thread on this, you guys. Remember, the LLC, the Florida entity is your first level. So you're either a Florida corporation, a Florida LLC, a Florida partnership. That's your first level. And that's where we're talking about you have to have a second member if you're an LLC. The second level is what does the IRS say about you? And that's where you either make the C or S election or choose to be taxed as a partnership. That tax questions are beyond the scope of this. That's you're going to want to speak to Gary or somebody like him. What we're speaking about right now is just the liability portions. Okay, do we have any more questions? The reason you don't have to worry about it if you're a corporation is you don't have as good a liability protection as an LLC. I guess I should have started with that.
yeah, that's
If
true.
if you have a corporation and Gary's suing me and my corporation happened to be worth something, now mine isn't worth much because guess what the name of it is? Meredith Nagel, right? I croak, how much is this company worth, right? I mean, it has some value, but let's suppose I really, really, have a going concern here, and Dan Newland comes after me, and I'm a regular C Corp. He could actually foreclose you guys on my stock certificates and start operating in my company and getting stock paid to me if he gets enough of stock, making decisions. I mean, so there is no liability protection for the corporation. They can just get right in there and get all your business assets. The
Right.
reason that people choose the LLC is because it puts what Gary called that fake wall, right? So again, same scenario. Dan Newland comes after me on my corporation. He can get in here and he can just start taking distributions and making decisions and doing whatever he wants to do with my stock, right? But if it was an LLC, he could do no more than say, get what the law calls a charging lien, which just is a fancy way of saying, if Meredith, you distribute something, I get some. Well, I don't have to make a distribution, right? Because I'm a single member LLC. So I say to Dan, hey, so guess what? I'm not going to make a distribution. And Dan says, well, guess what? You'll never be able to make a distribution because when you do, I'm going to get your $500,000. So then Dan and I go to mediation like this. And then what was the $500,000 liability is settled for much, much less. That is the basics of why you do an LLC. Dan is catching, let me tell you something. Dan Newland paid without my asking. His office called my office when my chief financial officer was in that catastrophic accident last year. Some of you might remember, broke both legs, an arm, a head, stuck in Cozumel. He paid to fly her and her husband via helicopter back to the United States, almost
Oh, really?
$70,000, and asked, would we please not give him any credit for it? So I say all that to say Dan Newland is probably one of my favorite people on the planet. And the reason I use him in every personal injury example you'll ever hear Nagel give is because I want to put him in your head so that if you have a car accident, you go see him because I'm so thankful for what he did for me. So anyway, that's a totally off topic. But anyway, yes, if Dan comes after you and you're a corporation, he's getting in your corporation. If he comes after you and have an LLC, you're at basically a Mexican standoff as long as you have observed the corporate formalities, one of them being having more than one sole member, which is what we've been talking about. The next one being please observe your corporate formalities. When when people go to Dan Newland, they say, Dan, all my stuff's in an LLC. Good luck to you. Well, Dan doesn't just roll over. The first thing that Dan tries to do is prove that the only reason you set that LLC up was to avoid people like him and that you weren't running it as a separate company. So you need to observe what we call the corporate formalities to make sure that you are really acting like you're a legit company. So when I loan money to my company to pay bills at times when we are low on cash, I actually have a promissory note. Meredith pays to the order of. I don't do anything with it, but I keep it in case I ever need it, in case I'm ever sued. Keep your corporate records, keep your money separate, have an operating agreement, please. Actually do something besides go on Sunbiz because I'm telling y'all, and you need to tell everybody you know. If all you've done is go on Sunbiz and register yourself with an LLC and Dan Newland comes a knocking, you got nothing. I don't know how to say it any other than that. That's where you're going to be. You're going to have nothing. My mother-in-law used him and he did well for her too. Good, good. Anybody have any other questions? Or Gary, do you want to add anything before we let people go? I want to make sure that we answer all the questions. So remember, there is no dumb question, folks.
You know, I have never had anybody with an LLC get sued and have a problem. But there is, I have been told, and I don't know that this is true, if somebody sues your LLC and gets a charging lien, then whatever income, let's say get a charging lien for all the income in the LLC, that means they have to pay tax on it.
That is correct.
And you don't have to distribute any money. So
They
if you
have to
got,
pay
if you
tax
got,
on money that you don't even give them or yourself.
and so
So
they're
this
going to
is
be a
why Dan
little,
Newland and I are like this at mediation and coming to a really nice, quick agreement.
exactly. I mean, you know, who's going to want to have to pay tax on income that they might never get?
Right.
But that's what happens if you've got, if your LLC is operated correctly.
Correctly, being more than
It
one
has to
member, more than one
more.
member. And so I know I'm going to get calls after this. Well, how many members do I have to have? How much interest? There is no hard and fast rule. Remember, Dan Newland's coming, right? Do something that looks legitimate. I tell my clients to think around somewhere around 5%, maybe between your wife or your husband and your kid, something like that. Mother, father, best friend, somebody. And you can see a lawyer and work with your CPA so that you don't have to give them much of anything every year for that free liability protection. Anybody else have any questions? I hope this has been helpful. And I hope that you tell everybody you know if this is new information to you, because I feel like a lot of people are out there thinking they have something they don't, and that breaks my heart. Because I feel like we have misled them into thinking they have something that they don't because they can just go on the internet and think they've done something when maybe all they've done is give the Department of State some more money. Any
You know,
questions before we go?
I don't want to scare people and say everybody's going to get sued. But I mean, I had to stay home one day and I turned on the TV and it was every ad was for a PI lawyer. They're all out there hunting for business. I mean, I'm not picking on Dan. I mean, he does a great job at advertising. So does John Morgan. I mean, there are people out there. The only way I know their names is they're on TV all the time.
Yeah,
So,
it's
and
true. And they're doing their part. There was a question of whether a trust can be a member of an LLC. Yes, Mary, and I have clients who particularly choose that form of ownership. Gary, do you have anything you want to say about that? A trust being
no,
a,
any entity can be a member of an LLC as long as it's taxed as a partnership. I mean, if you elect to have it as an S corporation, there are limitations. So before you make that choice, you really need to talk to somebody.
yeah, and you may think that the trust is what you need, and it's really not the best way to do it, right? Sometimes clients come to me and they want to have a trust be the owner of the LLC, and it's really, we can accomplish their testamentary goals in a better way. Sometimes it does make sense. So that's why you got to talk to somebody who knows what they're doing. Any other questions for anyone? Okay, so we're all walking out of here, and those of us who have single member LLCs are going to go and add a spouse, a kid, a bestie, something. And then if you have a question, if you really do want to stay a single member and want to talk about some options for that, you can give me a call at the office and I will pass through Gary's information. Or Gary, you want to give your number? Are you willing to do
Yeah,
that?
I'm in Winter Park. My number is 407-644-6066.
407-644-6066. And as usual, whether you need help in the Villages, Winter Garden, or Lake County, you can call us at 352-394-7408. 352-394-7408. Thank you guys so much for listening. And shout out to Dan Newland. Yeah,
I have a different
great.
opinion of him now. Thank you for telling me that story.
Isn't it? And it wasn't us calling. He has people that work with him that do nothing but look for opportunities that his foundation can make a difference in people's lives. And he asks not to get credit, which I just think is amazing. So there you
That
go.
is,
That's your
that's
Dan Newland positive comment for the day.
very good.
All right. Thank you guys for being here. Keep your eyes peeled for our next Lunch and Learn. This will be posted on the website. Thank you so much.